Ladies and gentlemen, good day and welcome to the Onmobile Global Limited Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prateek Jagtap from EY. Thank you, and over to you, sir.
Thank you, Inba. Good day and welcome to the Q3 FY23 earnings call of Onmobile Global Limited. Representing the management today, we have FC, Executive Chairman, Sanjay Baweja, Managing Director and Global CEO, Ashish Chatterjee, Global Group CFO, Neer, CEO of Onmo, Biswajit Nandi, Senior VP Global Sales, Radhika Venugopal, Vice President Finance. The call will start with the brief update about the overall performance during the quarter by Sanjay Baweja. Neer will give brief update on Onmo. Ashish will update on the financials, which will be then followed by FC, speaking on overall business activity and sharing his thoughts on future plans. We will then open for Q&A session. I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risks and uncertainties that we see. For a list of such considerations, please refer to the earnings presentation. Onmobile Global undertakes no obligation to publicly revise any forward-looking statement to reflect future or likely events or circumstances. Having said that, I now hand over the call to Mr. Sanjay. Over to you, sir.
Thank you, Prateek. Thank you all for taking this time out today to join us. Hope you're all doing well. I want to start by wishing everyone a very happy and prosperous New Year. The results and the presentation are already hosted on our website, and hopefully all of you have had a chance to look at them. As usual, I'll give a brief update on our products and business, and then Neer will talk about Onmo product a bit, and then Ashish will take you all through the highlights of the financial performance. So let me begin by with the updates on Challenges Arena. Throughout the quarter, actually, Challenges Arena sales has seen a very healthy growth. Revenue from Challenges Arena during the quarter grew in line with the number of customers who went live last quarter. Last quarter, 6 customers went live, and as a result, on 31st December 22, 35 customers were live, which is an increase of about 21%. CA revenue increased more than 50% quarter-on-quarter and nearly 7 times year-on-year, and it was in fact increased 21 times since its inception quarter. In Q3 FY23, 12 new customers agreed to our terms for Challenges Arena, taking our cumulative agreements to as high as 62 as of now. The continuous increase in customer agreements will reflect in the coming quarters from a revenue perspective. We expect the momentum to continue and these cumulative agreements to reach around 67 by the end of this financial year, driven by successful outbound sales and efforts resulting in an increased sales in FY23 and 24. As on Q3 FY23, out of the total 62 customer confirmations, the geographic split is Middle East and Africa is about 39%, followed by 31% in Asia, 19% in LATAM, and 11% in Europe. Our plan is to double down our focus on MEA and Asia, where there's a large amount of addressable market that we see. There is also an untapped market in LATAM and Europe as well, which we will look forward to. Further, out of these 62 customers, 45 are actually new logos, which is almost 73%. And these clearly serve as evidence of our noteworthy success, both in terms of sales and from the perspective of our potential future chances for cross-selling other products to them. We are continuing to see a healthy pipeline and expect to be live and sign many more clients in the coming quarters. In terms of usage and actual consumers, the cumulative gross paying subscribers at the end of December 2022 stood at about 13.6 million as compared to 10.5 million at the end of October 22, a growth of 29.4%. We are targeting to touch 17.6 million subscribers in Q4 FY23. Challenge Arena net active base increased to 3.1 million from about 2 million at the end of Q2. We are now targeting to touch about 3.8 million subscribers at the end of Q4 23. To achieve the base of this first 1 million subscribers, we took almost 4 quarters. But as of Q3 FY23, we were at 3.1 million active subscribers, which was an addition of 1 million plus subscribers within a quarter. This gives us confidence that CA is well positioned in the market and it also puts us in a great position to benefit from the revenue growth in the coming quarters. The current momentum is a lead indicator of the revenue growth we expect to see. Would like to reiterate that this is a subscription business and that revenue will increase enormously as we continue to add subscribers. Indeed, we believe that will significantly boost our revenues in the coming quarters. The revenue from Challenge Arena, like I said, increased by more than 7x year on year. It has grown close to 21x in the last 7 quarters and shown as high as a 52% growth quarter on quarter on this quarter itself. Now, let me talk also about the profitability of Challenge Arena. As stated in previous earnings calls, we are currently in the investment phase, investing in growth through disproportionately high marketing spend, particularly in the new geographies or operators with whom we go live on a quarter-on-quarter basis. As we go live with more and more customers, there is initially an increase in terms of the marketing spend that we have to do with that particular operator. Having said that, let me add that we accrue higher gross margins as the revenue mix skews in favor of the new products like Challenge Arena. We anticipate this to continue, resulting in an improvement in the profitability going forward. As you're all aware, the Challenge Arena has a significantly higher EBITDA compared to our existing product. We expect CA to generate an EBITDA of more than 30% in the coming quarters. Coming now to Onmo, and as informed in the previous calls, Onmo B2B business has started generating revenue for us from the last 2 quarters. As on 31st December 22, we had 18 customer confirmations, out of which 4 are live. Cumulative approvals are likely to reach about 23 by the end of Q4 23. The revenue witnessed a growth of 77% quarter on quarter. We have continued to see strong traction among the prospective customers. We are confident of generating higher B2B revenue into FY24. Also, please note that we are expecting at least 4 more customers to go live by the end of Q4. So we are at 4 now, and the expectation is we'll be at 8 by the end of this current quarter, which is the Q4. But let me also update on the tones and video. Let me start by saying that the legacy business, as is evident from the numbers, has been a bit of a challenge in the past few quarters, and may I say, the past few years. However, the new customer relationships that we have formed due to CA has enabled us to cross-sell the tones business across various operators across the globe. We have got 5 new customer agreements where 1 customer is already live and the others will go live over the next couple of quarters, some in this quarter and the balance in next. Further, I'm really pleased to let you know that we have received another customer confirmation from a large customer who has operations in 5 countries for the tones business. This will go live over the next few quarters again, and we will give you details as soon as we can in terms of the logo, etc. This is giving us real confidence about the stability and growth of our legacy revenue in the next year. However, for this quarter, we saw a drop of 7.3% on tones revenue due to lower revenues in a couple of customers. Video also degrew about 2% quarter on quarter due to some customer actions that we had. Lastly, let me briefly mention about our employees. We've had a very stable workforce, and in fact, attrition levels have been reduced over the last 6 months, and we continue to strengthen our teams for 2 new businesses, both CA and Onmo. With this, I would like to hand over the call to Nair, who will talk about Onmo, and after whom Ashish will talk about the financial performance. Over to you, Nair.
Thank you, Sanjay. Yes, hello again, everyone. My name is Nair Efrat, and I'm the CEO of Onmo. as Sanjay mentioned, we're starting to see the traction and the ramping up for the Onmobile operation. We're now live with several telcos, but we have quite a long list that's getting longer of new telcos in the pipeline that will go live this quarter and then the following quarters. The team has been busy working on three main streams. The first one is to really reshape and reinvent our operations in a way to allow everyone, the product team, the B2B team, the sales team, and user acquisition team, along with server deployment teams to really go live faster in a very smooth way and be available for users very fast. And I'm happy to say that we have managed to do that, and now we have a well-oiled machine to support the onboarding of Onmobile and rolling out with customers. The second stream is improving the product. We're building a world-class product that is meant to create a much higher level of engagement and retention. The key element of that is social engagement. We're very happy about the direction the product is going, and it's supposed to create very, very, very sticky, viral, and engaging experience for users around the world. And the third bucket is getting more and more titles and premium content from content providers. We're now in talks with several key content providers in Western markets and other markets in order to engage with them and add their games into the platform. We're going to share some news soon about that, but I'm very excited to be able to offer the many users of Onmobile a AAA and premium content in the app. And that's it for me. I'll turn it over to Ashish.
Thank you, Neer. A warm welcome and thank you everyone to join us on this call. I'll share the key financial highlights for this quarter and 9 months ended December 31st, 2022. In terms of the 9 months FY23 performance, we reported revenues of rupees 415 crores, a growth of around 1% on a year-on-year basis. Gross profit grew by 4.3% to rupees 210 crores, and a gross margin improved by 150 basis points to 52.9%. The growth was primarily driven by Challenges Arena. On the cost front, in the 9 months FY23, due to higher investments in CA and Onmo, our marketing expenses have increased by 91.3% YOY. EBITDA stood at rupees 10.7% with a margin of 2.7% for the 9 months FY23. Our profit after tax is 8.8 crores with a margin of 2.2%. In terms of quarter 3 FY23 performance, we have reported revenues of 137 crores. Gross profit witnessed a growth of 3.4% on a quarter-on-quarter basis to rupees 71 crores, and our gross margins improved by 170 basis points to 53.9% quarter-on-quarter. On the cost front in quarter 3, marketing grew by 10.5%, again primarily due to investments in new launches. EBITDA has stood at 2.7 crores with a margin of 2% for the quarter. The increase in EBITDA was due to improvement in gross margins, which is largely on account of revenue mix, which is increasingly in favor of Challenges Arena, which enjoys a much higher margin versus our legacy business. Our profit after tax is rupees 4.1 crores. Our margins, our PAT margins are for the quarter at 3.1%. In terms of geography, India has registered the highest growth at about 30%, while Asia follows it up with around 20% growth on a YOY basis during the quarter. During the quarter, we also incurred R&D or product development expenditure of rupees 21 crores as we continue to foray into the B2B space in gaming. A lot of operating metrics and data have already been shared in the presentation deck. I am sure all of you have access to the same. Some of the metrics are being shared for the first time to give you more visibility on the scale-up of Challenges Arena and Onmo. This may not be given in each quarter. With this, I will now hand over the call to FC.
Thank you, Ashish. Thank you, guys. Thanks all for logging into this call. I want to start by talking about consistency. You know, it's very important for me to be consistent in what we say to our team, what we say to our investors, and what we deliver. When we look at the first item that we announced, which I'm quite proud of, is the growth of Challenger Arena. It is consistent and as planned, actually. So the team is really delivering on this, and the growth will continue. So, for me, that's a good mark. Onmo following CA's growth, it is our target to at least meet what CA is doing this year for Onmo in the coming year, and that's exactly where we are in the revenue path. So again, consistency on this. Tone stables, we mentioned at the beginning of this year that tones would be stable on a yearly basis. We have a small hiccup, last quarter, this quarter. But again, if I step back and look at the year with tones, especially now that we've signed new customers coming in the course of the next quarters, we can say that the tones and legacy business will be stable at least, which will help. So, for me, consistency is important, and that's what the team is delivering here. So that's the first point I want to share with you. Second one is I want to come back on Challenger Arena again and look at the materiality. Before Challenger Arena was really small, so it didn't have much impact. Now, it's really a key quarter for us, as you can feel the impact of Challenger Arena. It is getting material. It grew by 60 million rupees this quarter. We're passing the 10 million run rates, and you sit already in the gross margin changing. So, as we move forward in the next quarters, the size of Challenger Arena, the size of the revenue, and the size of the profitability will have an impact on the business, and we will clearly see it. We are seeing it right now. To that end, also, the marketing dollars, as you can see, are increasing, and that's again, I don't want to repeat myself, but that's something we've mentioned in past calls, where we need 6 months, 2 quarters to really launch and invest in marketing before we start making money, real money on the operator. But the first initial launch, is the cost of marketing. So again, we launched this quarter a lot of operations, a lot more than the quarter before. So you see the marketing expense growing. Now, it was planned, it was part of the plan. So it will keep on going as we onboard more operators. We have many operations right now, both with CA and over 39 operators. It is a diversified revenue mix, with a lot of operators in key markets having important revenue. So it's really a mix. It's not driven by a couple of operators. It's really diversified. And obviously, we're focusing on key markets with key operators first, especially with Onmobile now, to have the biggest impact early on. But that's our strategy is working. And I just want to finish on this thought here. When we look at all the revenue generated today with CA and Onmobile, we have more operators. When we look at how many people we have on the backlog, operators in the backlog, we have today, as of these numbers, 43 operators, 27 with CA, 16 with Onmobile to launch. So we have more operators to launch right now that I've already, said we're ready to launch than what we have live. So that's the kind of revenue that's coming up in the coming year. And obviously, we're not stopping there. We're signing more and more operators. So for me, it's a confirmation of the plan, and I want to make sure that investors understand what we're investing, because we are investing. Just to be clear, we're investing in this growth, and I am quite confident that it will pay back in the coming year. So that's what I wanted to share today with all. So let's open the floor for questions, please.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the first question from the line of Dhanesh Jain, an individual investor. Please go ahead.
Yeah. Hi, sir. Sir, I have three basic questions. The first question is on the challenges arena revenue. So, sir, with the strong pace of growth, can you provide guidance for the particular revenue for FY23 as well for FY24? This is my first question. And my second part is on margin side. A company is in right now investment phase, they're putting more that higher margin, higher marketing expenses which impacting margin. So when you expect to be a stable margin or normalized marketing expenses which can aid to higher margin, or we can assume like by Q1 or Q2 of FY24 we can expect to that margin start improving. And my third part is on if you provide some update on the fundraising plan, how that part is going on, or company having any plan to monetize the current investment or part of investment in Chingari. So these are my three basic questions. Thank you, sir.
Yeah, thank you for your questions. As far as challenges arena is concerned, it will continue to, like we said, it will continue to grow rapidly. And you asked about how the next year would look. Our target would be that we at least show you a triple-digit growth year on year. So whatever we for this year, we should more than double in the next year on an overall basis. While I can't give specific numbers from a target perspective, but clearly it will be a triple-digit growth that we are looking at or targeting ourselves. And yes, you're right. This is the investment phase, and from a process perspective, from the way it works is that every new geography, the first, like FC also mentioned, the first 2-3 quarters are towards the investment, and then the profitability starts improving. Now, as bigger and bigger base becomes more than 2-3 quarters old, we will see profitability improving pretty rapidly. And you're right, Q1, Q2, Q1, Q3 next year will have significantly better profitability as compared to the current numbers, because, like I said, the base of Challenges Arena customers who are there, who've been there for 2-3 quarters, will grow, and therefore the profitability is bound to grow. As far as fundraising plan is concerned, we continue to look at those aspects. But like having said that, and our need for fundraising is mostly from an Onmo perspective, where again the investment is there, going there in terms of the product development, which like Neer mentioned, we are continuing to refine our product into a world-class product. And there's no specifics, but we have enough options from a equity perspective, which we are working on with people, and debt, where we have numbers already with us in terms of banks wanting to give us the funding. So we are still deciding as to what is the best way forward from a company perspective.
Okay.
I hope
sir,
questions.
Yes, sir. Also, company having any plan to monetize the current investment in Chingari, or you can provide the current valuation of the investment we done in Chingari?
Yeah. So I can't. I mean, obviously I can't give the current valuation for Chingari. That's not something that, because they've not had a recent transaction really. But the estimate is far higher than what we invested in, but we don't know that. They are in the process of raising funding. My sense is, and looking at the markets that have been there, I think although the numbers will probably be greater than what we've invested at, we can't put a finger on what exactly is the number. And yes, we will look at diluting or exiting Chingari at some stage, but may not be immediate.
Okay, thank you for detailed answer. Thank you.
Thank you. Before we take a next question, we'd like to remind participants to ask a question. You may enter star and 1. The next question is from the line of Mithun Ashwath from Kiva Advisors. Please go ahead.
Yeah. Hello.
Yeah.
I just wanted to understand for the next year. You mentioned that you could double the Challenger Arena business. Even if you were to do that, on an overall level, what sort of revenue growth are you going to see? Because I'm just looking at your numbers. From FY19 to now, we've actually been flat or been declining in terms of overall revenues. Or even if you from FY18. In FY18, we were at about 630 crores of top line, and now we're at a run rate of about 520 crores. So even if I assume Challengers Arena doubles in terms of the run rate in FY24 and the remaining business remains flat, we would touch maybe around 600 crores. Is my working right? Because somewhere that was my first question.
Okay, let me start by answering that. Your working is not completely right. While you added the numbers of Challenge Arena, because I was answering only for Challenge Arena, I mentioned Challenge Arena. Onmo, we're going to have a multiple triple-digit growth. While we may get a 2x for Challenge Arena, for Onmo we may have a much higher number, and I don't want to get into the detail of how much higher, because that also the base is smaller. But having said that, it will be a very different triple-digit growth. So that's the second part. The third part is and I mentioned in the initially when I spoke is that even for Tones business we expect some growth. So clearly, and I get where you're coming from in terms of 2018 onwards. I mean, our biggest challenge is to get to that first 2018 number. We will go towards that. How far we reach that, or where do we reach how close we are to that, or whether we cross it, I won't put a finger on that, but we are gunning for that number for
sure. Right. My second question was on the marketing spends that you're doing. Initially, is bearing fruit in terms of customers and subscribers. I just wanted to understand, once you have all these operators on board, what would a normalized marketing spend look like? Just wanted to understand that. And if you could also give details on what is the revenue from the Onmo part, apart from the Challengers Arena.
So, the marketing spend on a sustained basis is maybe slightly below 50%. It's below 50%, and this is a product where the gross margins are as high as about 90 odd percent. So that's the range we're talking. It'll be below 50%, and I can't give specific numbers because continuously we've seen changes happening because many new operators keep joining, and we have a uptick and then we have a clear reduction. Our aim is to get to a number which is in its 40s in terms of the marketing spend, and therefore the balance, a lot of that will go towards profitability. What is your question on Onmo, sorry?
Yeah, what is the revenue there that you've not mentioned, I think, in your presentation?
Yeah, I think it's a small revenue. We're growing rapidly. We're not mentioning yet that Onmo revenue, but let me show you next year onward we'll start mentioning that separately on an ongoing basis. It's a small revenue yet. Like we started with Challenge Arena, in the first few quarters we didn't really mention the specifics, but we will start doing that come Q1 of next year.
And just one last question. There's been a massive deterioration in the cash balance that you've had from over 260 crores in Q4 21 to now only 73 crores. So, there's been a substantial cash burn to achieve whatever you are doing right now. And I just wanted to understand, even in this quarter, you have a product development cost of close to 20 crores. I'm not getting clarity in terms of where this money is going. Is it for new games? What are you spending this on? Is it a one-time marketing spend? Because don't you see this could be a risk if those subscribers come onto the platform on your on the telecom operator that you are on, and then later if they stop? I just wanted to get a sense of how this model will work compared to your tones and your videos business, which has been largely stable over the years. So I just wanted to get a sense of how this will work.
So I'll take that. This is Ashish. So, our marketing investments are more like working capital investments that happen when we kind of launch an operator. So there's a CAC payback of 2 to 3 months. So whatever we kind of spend behind acquiring a customer eventually comes back to us in form of over a 2-3 month period. So you do have a teaming leading or a timing difference between when we are in the launch phase, when we are acquiring a customer, and when the customer completely breaks even in terms of return of the CAC. In terms of investments, we continue to invest behind Onmo, which is one of our biggest product development initiatives we have taken up in the company. So our internal accruals, we believe, will improve as we go ahead. Quarter 3 was a little tough quarter, but I think we see new accounts getting added even in the legacy business. So we will see improvements both in margins and operating profits going forward. And we will look at alternatives of augmenting our cash reserves. We have been always a debt-free, dividend-paying company, so we have enough elbow room to do that.
Yeah, let me just add to that. While you asked about Challenge Arena, let me say that the Challenge Arena is profitable for us. And going forward, it will become more and more profitable. So, to your point of whether, this investment is going towards the marketing, no. Challenge Arena is now at a stage where it is taking care of itself. I think the bigger spend is towards, the product development that is happening in Onmo. And that's where our biggest focus is, because Challenges Arena is our present in this year and the coming year in terms of revenue growth. And the year subsequently will show Onmo growing pretty rapidly, and that's why the investment is moving into Onmo in a big way, and that's where you'll see huge growth coming over the next 3-4 years and beyond.
So, just again, on this product development expense of 20 crores in Q3, and then it's about 16.7 in Q2 and 15 crores in Q1, what is this essentially going into? If you can kind of make us understand what actually the spend is going towards, and because if marketing spend is different, what is this spend going towards? And when do we expect, and what kind of return on this do we expect over the coming year or so? So I'm not getting a sense of where this money is being spent.
So product development largely goes into salaries. So we have R&D centers in Sweden, Montreal, and we have teams sitting in US as well as India. So a large chunk of it goes towards developing our cloud gaming product Onmo, and we have already spent a good amount over there. So that's where that piece is coming. As you know, Onmo is a unique platform which has the snapshot technology as well as a streaming technology. So that is that platform which we have been building over the last few quarters. As we ramp up the launch of Onmo across multiple operators, we will move to a commercial live, and that's when we'll stop capitalizing these expenditures in the coming quarters.
Okay. Thank you.
And sorry, just to add, one of your questions in terms of what was our Onmo revenue. I think we have mentioned in our presentation for this Q3 it is 4.6 crores.
Thank you. We'll take a next question from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Well, thanks for the opportunity, and congratulations on the fantastic ramp-up with the subscriber base in Challenges Arena.
Mr. Rajesh, sorry to interrupt. Could you please use a handset mode and speak, sir? Your audio is a bit muffled.
Is it better now?
Yes, please go
Hello.
ahead.
Yeah. So my first question was that in Q4, you are showing the subscriber growth, which when one compares to over Q3, it's much lower than in the preceding quarter. So is it just the nature of the ramp up with the telecom clients that you have signed, which is why the growth in Q4 in the subs will be not as good as what it has been historically, or what's going on basically there?
So, sorry, I mean, what exactly are you saying? Are you talking about our net active subscribers? What is the question that I couldn't get it? I'm sorry.
No problem, Sanjay. I'll repeat myself. So what I'm saying is, I don't have the presentation in front of me, but in one of your charts, you are showing the customers you are going to add in Q4, which is 4 point something, and that quarter-over-quarter growth in Q3 also you added 4 plus, or just about 4, I think. So my question is that this is not the kind of growth that one has been seeing in the previous quarters. More so, given the number of partners that you are adding, telecom partners, it seems a very low growth compared to what you have done historically in the preceding 3-4 quarters. So just curious if it is a one-off that some of the partners will start ramping up in Q1, or is this sort of the new level for your subscriber growth? That's really the question.
Oh yeah. So I think this is a kind of a cumulative business where subscribers keep coming in, and yes, there's an element of churn, but as more and more customers are there, the amount of overall subscribers will continue to grow. And whether, for example, what I mentioned, we were able to add 1 million subscribers in a quarter, maybe we'll do that even earlier for the next quarter. So I think very clearly, as from 10 customers to now 35 and going beyond in this quarter as we speak, we will have a much larger base of consumers from an addressable market perspective, and therefore our ability to add more and more consumers will be there, and every consumer is a paying consumer to that extent. So yes, there is opportunity to get more and more consumers as we go along.
So you're saying this quarter or the Q4 quarter growth that you are projecting is an aberration, and there will be more growth quarter over quarter in the number of subs that you add. Is that the way I should understand it?
4 million is a good number. Please remember Q2, if you recollect, we had some issues, and therefore the Q3 number is a larger number as compared to Q2, because if you recollect, at the end of Q2 we had said that there were some customer issues which had impacted us a bit, especially in September itself. So that kind of we came back sharply. But I think please also remember that this although these are smaller things, but this has lesser days in terms of a quarter being a February month. But all of this, broadly, we will continue to grow at this pace and maybe higher as we go along. So aberration or not, our growth pace will continue to expand is what I'll say.
Understood. And then on the base business, can you share what has been the decline in revenue for the first 9 months?
Yeah, just give us a second.
It's largely relatively flat. It's a 1% growth in revenues over year-on-year, 9 months.
Okay. So the question really is that, do you think now in Q3 that base business, the legacy business, has stabilized, and as you were saying, that you are getting more customers in tones and videos. So what kind of growth can we expect in fiscal year 24? Is it going to be a single digit? I'm just talking about business, or could we see a double-digit growth in that business?
For next year, specific numbers I would not like to give, but we have decent growth. I mean, it's very difficult to put a finger on this because there is an element of customer getting involved into some marketing actions that they might want to take. But we will definitely see growth, whether it's double digit or around that. Would not want to put a finger on that one as yet. So while I'm particularly sure about Challenger Arena and Onmo. From a legacy perspective, you'll see growth for sure. I would not like to put a finger on from a double digit or whatever. I think as we go along, we'll give you more clarity maybe in the coming quarters.
But you expect a growth in that business in fiscal year 24, even if, let's say, it's a mid-single digit growth.
That's our objective. That's our target. We hope to achieve that.
Okay. And then on the marketing spend that you did this quarter, if you can just give some idea about as to how much was it for Onmo versus Challenger Arena?
So largely, 50% of the cost is towards the new businesses, Challenger Arena and Onmo.
Okay. All right. And the remainder is for the legacy business, right? Is that the way one should understand that?
Yeah.
Okay. And then on the Chingari side, you commented about the valuation, but my question is more on the business synergies that we were thinking about when we made that investment. So how is that objective panning out in terms of getting direct customers, direct consumers for the B2C business of Onmo?
So, as of now, we've shifted our stance and for the correct reasons in terms of a large amount of funding which would be required from a D2C perspective. We're now focused more on B2B business even for Onmo over the next 2-3 years, and our focus is to gain a critical mass there where we are across the globe with our network. So, and post that is when we will focus on getting to D2C because as Nair mentioned, during that time frame, the finish of the product will also get finer and finer, and the world-class product which is now getting there will get even better. So to that extent, Chingari's flow of is not as much being used by us because the D2C part has taken that shift. So that's where we are as of now.
So then, given the situation of our balance sheet, would you consider monetizing that particular investment in this round?
Yes. So this round, they're doing probably a bond round, but whenever the next round happens, we will give it a very, very serious look in terms of monetizing. Maybe even earlier, but definitely in their next round of equity, we will give it a serious talk. And obviously, the board will take the final call, but we will definitely look at very serious consideration in terms of getting that cash because like you've rightly pointed out, I think our need is the cash and whenever we get that opportunity, we will seriously look at that.
Understood. Thank you and all the best.
Thank you. Any participant who wishes to ask a question may enter star and 1. The next question is from the line of Rameshan Prakash from Pragya Consulting. Please go ahead.
Thank you so much for taking my call and congratulations on the set of numbers. The question I'm asking is that as I see the turnover, 85% of the turnover presently is legacy and 15% is CA with a very small amount of Onmo. And if I look 3 years ahead, I'm willing to look a little bit beyond next year. Do we see like CA and Onmo having similar numbers as the legacy business in terms of overall numbers? And of course, hopefully better EBITDAs because by then the marketing and the business development spend should be done. I'm trying to understand like as an overall business, when do we get to a point where the one-time business development is done, the one-time marketing costs are done, then we get to some kind of stability in terms of EBITDAs and revenue growth?
So you're right. We expect both Challenger Arena and Onmo to be as big or bigger than our legacy businesses. So we've got two parts of legacy business, tones and videos. We expect both Challenger Arena and Onmo to be bigger than those. So clearly that, and you're right, whether it happens in 2 years from now or maybe 3rd year from now, but definitely that's what is likely to happen. Clearly, from our perspective, that's what we are aiming for. And also from a profitability perspective, the maturity of the profitability comes from geography after geography, or more precisely operator after operator. And like we said, and I think FC also mentioned, every 2-3 quarters, the moment the 2-3 quarters are over, it starts to get into the mature state where we end up making 30% plus kind of margin in a particular operator. So, but having said that, as we continue to launch more and more operators, the initial spend is, and we are, like we said, this is the time of investment for getting more and more customers and thereby getting more and more consumers. So initially, whenever we launch a new customer, there is a definite much bigger chunk of marketing spend in terms of percentage of revenue, but it settles down in their 40s over time. And therefore, like I said, we are already, for Challenge Arena, we've started to become profitable. Over this next few quarters, our profitability from Challenge Arena is set to increase because, like I said, the base is getting bigger and we will continue to get more and more profitable as we go along. You can notice that our gross margins have started to get better and better. So we were in the 40s, we are up in high 50s. Hopefully next year, by the end of next year, we'll be in the 60s. So that's where the growth is happening. As we change from the perspective of mix, clearly we will see also bottom line getting impacted positively as we go along.
Just following on that question to say, let's say we look 3 years ahead to FY26. At that time, the marketing spend should have gone down to at least a point where you get a 30% EBITDA on both Onmo and CA. And whatever is the EBITDA of the legacy business, the blended EBITDA should be over 20%. It should somewhere there.
Yep.
I'm not asking for an actual number. I'm just asking for direction.
No, your mathematics is correct.
Fine, sir. Thank you, sir. Thank you, sir. Thank you, and the best of luck.
Thank you. Our next question is from Mithun Ashwath from Kiva Advisors. Please go ahead.
Yeah, just on you were mentioning about your investment in Chingari. Wanted to understand how much have you invested so far, and what was the valuation? What is the stake that you have, and what was the last round valuation of Chingari?
So we have hold about 10% equity in Chingari. From a valuation perspective, in the last round, which was much earlier, I think it was, although they've not made it public, but I think it was around $80 million, I think, somewhere around there. Currently, obviously, they're looking at much bigger numbers, and I don't want to put a number to that, but they are expecting to raise money over the next 6 to 18 to 24 months. So hopefully we will be a part of that plan. We may, like I mentioned earlier to another question, we will definitely look to get liquidity from that.
And how much have you invested for that 10%?
You're coming. So we've invested in 2 rounds. I think the first round was probably at half the valuation. The second round was double, and many other people also invested. And then that's where we are.
We have invested close to around 40-41 crores for our 10%. And as Sanjay mentioned, that this was in 2 rounds, one at a different valuation, the other at a different valuation.
So 41 crores is what we've invested. That's all I wanted to know. That's all. Thank you.
Thank you. Our next question is from the line of Sai Kiran Pulavarti from Pulavarti Advisors. Please go ahead.
Yeah, hi. Thanks for taking my question, and congratulations on a good scale-up on CA. So just 3 questions from my side. The first question is, at this point of time, whether the legacy business was trending at what I can say 10 to 11% EBITDA margin, which we were reporting before the gaming scale-up. That's my first question.
And the second question, one of the earlier questions while answering, you mentioned that you are capitalizing the employee expenses primarily for Onmo development, and then you said that at certain point of time you will decide to, what I can say, expense it in the P&L. So just want to understand, sir, if that's the case, considering this plus potentially marketing expenses, the scale which Onmo has to have to be EBITDA positive should be substantially higher. Is my understanding right? And third question is that, sir, you mentioned that the marketing expenses 50% is gaming and 50% is erstwhile. But if I look at the historical numbers, in Q1 FY21, the marketing cost was somewhere around 5 crores, and currently it's around 20 crores. I'm just trying to understand, sir, do you mean that the legacy marketing expenses have almost like doubled since Q1 FY21? Thank you.
So, from a legacy margin perspective, you're right. We were at 10-11%. In fact, we were slightly higher than that, 12 to 13%. And but like you rightly mentioned, there has been a focus on growth, and initially we had people working towards Challenges Arena, and now to Onmo cost is getting capitalized, but we did not capitalize any of the people's costs or anything related to Challenges Arena. So clearly, Challenges Arena costs got absorbed in the P&L, and therefore you see some amount of reduction from a profitability perspective, and also the marketing aspect. So clearly, that's something that we have, and now we're focused on making that more profitable. I think we will continue to get the legacy percentages back once we segregate and show that. And Challenges Arena will, of course, be much more profitable, as we've been talking about that. In terms of capitalization, like you said, that Onmo part is getting capitalized, and yes, we will have revenue will be much higher. So Onmo will need to generate a lot more revenue to be profitable. So, and we will expect that to happen over the next year, towards the end of next year. What's the third part of the question? Is that,
and the marketing costs, sir. Marketing costs.
Yeah. So on marketing, our legacy marketing has remained flat. So largely the entire growth that you see versus previous years is only largely Challenges Arena and Onmo. There was no Onmo last year. There was a very small amount of Challenges Arena last year. So it's the entire growth that you see is on the back of new products.
So last year the total marketing cost is around 40.7 crores, and currently it's around 54 crores. You mean to say that FY22 41 crores doesn't have meaningful anything related to?
If you look at the 9-month number, it's 28.4 crores last year, and that's gone to 54.3 crores.
Got it. So you mean to say that FY22 doesn't have meaningful anything regarding the CA, right?
It has very small amount of CA. It has no Onmo.
Okay, great. Thanks, also. Thank you.
Thank you. Our next question is from the line of Patrick Nathias, an individual investor. Please go ahead.
My question actually got answered. It was on the valuation front. The question got asked previously and got answered. Thank you.
Thank you. Our next question is from the line of Mithun Ashwath from Kiva Advisors. Please go ahead.
Yeah. This question is more to FC. I just wanted to understand, we've over the years had several avatars and initiatives. It was music and then tones, and then now we're going into gaming. I just want to understand, these have been experiments that we've done. Do we see that, how does he feel on this journey that we are taking? I just want to understand whether you think it is in the right direction, because we had these plans for DT, direct to consumer, which have been shelved now. So just want to understand what his thoughts are in terms of how the company is positioned and how it will look like maybe a couple of years from now.
Yeah, good point. The initial tones, when you talk about music, you talk about the music app that we wanted to launch on top of tones, right? That was in 2016, and if you remember right, to do that, we were actually buying the tones business from the operators in India. We had actually verbal deals with all the operators to transfer their business. So, right away, the actual subscribers would have been our subscribers. So the fall of that model happened after the demonetization, that happened in November 2016, and the actual geo launch in 2017 that actually did a mess in the telecom industry, and that's where they actually, really went really rough on us on tones, which actually killed that model, right? 2018, we actually decided to go into gaming. That's where we did the first acquisition of Appland, if you remember, right? And the key was really to push gaming towards operators, but we knew we needed to get into cloud gaming. We analyzed all the solutions in 2019, and that's where we decided to develop our own. To be honest, with the type of investment, and we actually reviewed this to the board yesterday, but the type of investment we did to build our own cloud gaming infrastructure and pure play mobile gaming service. We're the only pure play mobile cloud gaming service, towards mobile operators. And I repeated, the only way to do a pure play 5G mobile service cloud gaming is to deploy servers within an operator. Nobody else really does that for mobile users. But the actual investment to do this, we've done it with, it is a big cost, as you can see, cash-wise, that we've invested, but in relative terms to other competitors that have invested in cloud gaming, it's really, really, a small amount. So that investment was done, end of 2019, where we really decided into that. We did the Rob Zero deal in the course of 2020, and we developed the platform. The D2C initiative, just to be clear, I truly believe Onmo is a D2C first approach where the engagement, the service has to be a D2C service. But the beauty of our plan now is to really focus on deploying that D2C service across operator for the subscription revenues. As you can see, we launch an operator, yes, we invest in marketing, but we get subscription revenues. The funnel is direct, right? As soon as we put the marketing dollars, we know how much revenues we're making, which is very different for D2C. As you know, you invest in marketing in D2C and you don't know. You get free subscribers. By the time they're engaged and they decide to pay, the funnel is very long and painful and more costly. So that's why, Nir and the whole approach Nir has with the team is really to build a D2C first product. And so, that plan was not, although we did, really launch D2C first in India, as you can see, but, we did the metrics, and it makes more sense to really focus on operators. Keep in mind that every deployment we'll be doing soon will be linking to the same D2C site. So it will be a central D2C site linked to all the operators that we're adding on this, using the same servers, for the D2C service and the B2B service. So for now, we're not putting any money in D2C. That's why Shingari, we're not really using the traffic. I mean, it still goes on our site. We still play, but we don't monetize it, right? We didn't monetize that part. We're really focusing on delivering the operators, maximizing the revenues. And what I like that we see the traction with Challenge Arena, and we're following the exact same traction, right? So we have like 2 servers in a row getting launched. So does this answer your question?
No. I'm completely with you with what you've done, and obviously things change. I just want to know, where do you see the company 2 years from now? Because I just wanted to understand, because you have ambitions of. I think you had a huge ambition to make this a gaming sort of company, and that's why it was driven there. Now it seems that you've become more conservative and you want to keep profitability, and that's the focus. So I just want to understand from you as the promoter, what do you want Onmobile to become? That's what I was trying to look at.
Well, first of all, just on the financial business, I like profitability, right? So to be clear with all investors, when we invest dollars, we put it at the right place, right? So my view is, in the next years to have a profitable company having very attractive, gaming services. And today we have a suite of service. Gaming was a very small part of our revenues. Now it's really growing. We're hitting almost 15% now. And my view is to have a real growing company altogether, including the legacy, that makes money. And, right now we're in the tough phase where, we've done the investments, we're putting the marketing dollars, and now there's more onboarding to be done, as I was mentioning, with operators. So right now, financially, it looks tough, but every time we activate a customer, an operator, we know we'll make money. And that's the key here. So that's...
Okay, thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the floor back to the management for closing comments. Over to you, sir.
Thank you. Thank you all. So big quarter, we were doing a lot of work. All your questions exactly we're in the budget phase exactly right now to plan for the year 24, 23, 24. So we're right into it. Next call will be end of May, so I look forward to share the developments with all of you by then. Thank you all.
Thank you. On behalf of Onmobile Global Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.